Hello and welcome to today's urgent market update video, which is brought to you by the Live Trade Room. Now, today is Thursday, the 25th of May, 2023. You're probably familiar with the market behaviors over the last number of weeks. They've been really quite mixed and really quite choppy. And it's really because the market fundamentals are also really quite mixed, and the backdrop is a little bit on the nervy side. So there's fear and anxieties. We've got slightly lower volume levels in these markets, and we've got a narrow market breadth when it comes to US indices, markets like boom markets that we're seeing in the NASDAQ, for example, largely driven by large cap tech firms, very much around this theme of artificial intelligence. So the title of this particular video then is following on from that. We've got sort of quite nervy markets, and we've got this US debt default on the horizon. And that X date, according to Janet Yellen, I mean, it's up for discussion a little bit, we believe, but it's around the 1st of June. So we're only a week away from that potential, the US basically defaulting on its debt, and that would have wide-ranging consequences, of course, for these markets. So, but the question we want to ask is, what will we expect coming out of this event, and where are we likely to find the best type of opportunities? So let's get straight into it then. We'll start, of course, with our risk warning. Take a brief moment to familiarize yourself with our risk warning currently up on screen. And let's get straight into it then. So what we want to bring your attention to is kind of the market conditions. Really, you can pretty much go back. You can go back even a little bit further to the lows that we saw this is the S&P 500, by the way, in sort of early February time. We've been in this little bit of a bullish market condition, all in all, and we keep making sort of new highs as this market, and that's the definition of a bit of a mini uptrend, is a series of higher highs and higher lows. And that's really what we're seeing. We're seeing that play out in front of us. So we had a lot of decision making that's really needed up in these levels, and our position has really been looking for some selling opportunities when those present themselves, and we got that opportunity just 2 days ago. We're able to sell up at these higher levels, sizable sort of 2-day big moves over the last couple of trading days. We're able to book profit literally around these lows down here, and now we're seeing these markets look like they're going to turn back to the upside. So this little backdrop, there was a bit of a dawning, or a bit of a realization that actually, I mean, and there's two major focuses for these markets. Well, I suppose three, but two of them are very closely linked. So the first one is this debt ceiling negotiations which are going on. So all sides are saying we'll come to a conclusion, but at this moment in time, there is no conclusion on the table. And actually, the rhetoric even more recently is still very staunch. A lot of red lines that doesn't look like there's an easy way forward. However, we would still broadly anticipate that a deal will get done. It'd be very difficult to see these politicians actually make the US economy default on its debt obligations. That would be catastrophic for, capitalist, democratic nation, especially the size of the US, who are really the global leaders in terms of global finance. So very hard to see that situation. We've been here many times over the years. We had a technical default in 2011, for those of you that are familiar. The question is, if we just separate things just for a brief moment before we look at central bank monetary policy and this inflation story, which is always ticking along in the background, just purely from a default perspective, if there was a default, we would assume that we would get very significant selling across the equity markets. It would be really bad news. And in markets like the dollar, for example, we would expect significant dollar strength off the back of this particular event. It's that flight to safety trade would be the reason why the dollar would continue to strengthen. Now, over the last few weeks, there has been this, we've been able to capitalize on some really good sell trades in euro dollar over the last 2 weeks, 2-3 weeks. And it looks like we're going to get further downside. So we're kind of prepared for some continuing dollar strength. So the problem we've got is if we get a resolution over the weekend, for example, we'd probably see the dollar selling off quite considerably, and we'd probably see the equities actually start to strengthen with purpose. There's an awful lot of consolidation up at these highs. We are making higher highs, but we are technically making lower lows in there as well. So a little bit on the concerning side. But just know, as far as the debt ceiling negotiations, if we get a positive outcome, we'd probably see a short-term uplift across the equity markets. Then the narrative is very quickly going to shift to the Fed. And you'll see we'll be monitoring a lot of the data points over the next few weeks. If we just share and put up Forex Factory, there's some very important news events in the pipeline. The first one is actually tomorrow, which is core PCE price index numbers, personal consumption numbers. And the prices for consumers like us, do seem to be going up. And this is a very important indicator as far as the Fed are concerned. In addition, if I just sort of very briefly take you through the next week or two, if we go to next Monday, it's a bank holiday across the board again. We're in this, pre-summer bank holiday kind of area. So bank holiday across the UK, Europe, and also in the US as well. However, we'll start preparing ourselves for some important news events. Next week, we'll have a strong focus on job numbers. So we get the job jolt openings expected to kind of improve on the 9.5 million jobs that are available in the US. And then if we move this along just a little bit, we'll have ADP non-unemployment claims as well. And then the big news event next week is without doubt going to be next Friday, which is non-farm payroll. So the Fed are going to go into the meeting, and this is why I want to take you on to just the following week. I'm pretty sure the Fed meeting is in this week. I'll just no, it's actually the week after. Okay, so the week after next, we will be looking at other central banks. We'll be hearing from OPEC as well. We'll be hearing from the RBA. Will they continue to increase rates? But the next thing, we'll have unemployment claims. So we'll be monitoring very carefully these very important indicators as far as the Fed are concerned, because on the, I must get the actual date. Yes, the FOMC is on the 14th of June. This is going to be important because prior to this event, not only do we have producer price index, but we've got CPI numbers as well. So the next 2 weeks are really pivotal for these markets. Off the back of the next 2 weeks, we would probably be an awful lot clearer in terms of how these markets are very much likely to react, going forward for the remainder of this trading year. We've got the dilemma that this market is dealing with, which is a bit on the strange or idiotic side of things, where these markets have taken it upon themselves to price in not just a rate pause, but 2 rate cuts between now and the end of this year. We don't really see a condition for that. So we think the markets are a little bit offside with regards to that. We've now got the Fed saying that we will probably take a pause in June, on the 14th of June. We'd probably take a pause, and then what's likely to happen is we'll continue to increase rates. So what is not in the reckoning, it seems, is what the market is anticipating, which is actually seeing these rate hikes actually roll over. And this is where our narrative begins to come in. So debt ceiling resolution, and still this belief that the Fed are going to pause and then pivot would absolutely lead to some additional upside risk on conditions, which we would expect the US indices to push higher. Maybe if we get a resolution on the debt ceiling talks, then we'll probably see the dollar selling off a little bit. We'll probably see US bond yields rolling over back to the downside, and we'll probably see a little bit of a move across the commodity markets. Now, the last couple of days, we've actually shifted quite nicely to this hawkish Fed, that we may take a pause, but we are going to be going back to rate hikes, perhaps after the summer. And as a result, if there's any kind of difficulty with the debt, and this is why there might be some short-term continuing opportunities in the dollar until we get that debt ceiling resolution in place. And what's worrying is, if I just share with you the bond markets, we'll just have a look at the 2-year just for now. But this is looking a lot more elevated than what it has done since we were up at 5% going back to March, just prior to the banking crisis. So we're kind of retracing this little drop now really quite aggressively. We're up at 4.42, which is really quite significant. And that would suggest to us that there is probably more potential to the downside than there is to the upside as things currently stand. The problem we've got is we've got a small number of operators in this environment looking to continue to buy these markets. And we refer to it as they're buyers that stick their fingers in their ears. They're not interested in any other context or any other developments, and they've just got this agenda to continue to buy. The thing is, how long will that last for? And when these markets look to turn, like they did in the last 2 previous days, which is a kind of a decent amount of volatility, actually technically making new lows in here as well yesterday. We're currently seeing that little buying, that resilience coming in again. But really, we have, I suppose, the conditions to support the indices actually rolling over to the downside. So either way, there is some very significant opportunities potentially in the pipeline. So yes, the first news event to be very mindful of is this potential default in the US, debt default. That would be, there'd be very significant moves. Similarly, there might be a short-term boost to US indices if we get a debt ceiling resolution in play between now and the end of next week. Then that is also a likely opportunity. And then all attentions will shift to unemployment numbers in the US and inflation data prior to the FOMC on the 14th of June. So a really pivotal 2-3 weeks ahead. So we wanted to give you a little bit of a heads up on that. Over the next 2 or 3 weeks, there'll be a few more of these market update videos to go out. If you do have any questions about anything covered, don't hesitate to drop us an email. Just send an email to support@thelivetraderoom.com. Myself or one of my colleagues will get back to you as soon as we possibly can. And whatever happens, we are likely to get some really significant moves in these markets. And we want to be as prepared as we possibly can for opportunities, coherent opportunities that make sense, that are of a high probability in nature. So that's our plan. So on that note, guys, that draws us an end to this particular video. I hope it just sheds a bit of light perhaps on aspects of these markets and what these markets are currently trying to deal with. So look, thanks very much for joining us as always. Stay tuned for our next video. We will get it out to you as soon as we can. We didn't really have much really to talk about over the last few weeks, strangely, which is a bit on the weird side, but hopefully we'll be able to get a few more of these market videos out now over the next few weeks. So stay tuned for that. Just to let you know, we do broadcast we have a daily pre-market trade plan session live at 7:30 a.m. every morning. And then we trade the markets live every day from 8 a.m. for the European session, and again at 12:45 for the US trading session. And these are all UK times, by the way, guys. So for more information, just go to our website, thelivetraderoom.com. Do contact us. There's a chat box in there if you do have any questions. Happy to answer them as we go. And we look forward to seeing you next time with our next urgent market update video. So for everyone here, take care. Speak to you soon. Bye for now.